Let's talk to Matt Maley, Chief Market Strategist at the asset management company Miller Tabak Co Matt, good to see you. Well, get your crystal ball out. What's going to happen? What about another rate hike?
Well, it does seem like they're going to go with the 25 basis points today. If they had really changed their mind, they would have. They're in what they call the quiet period, where they can't talk publicly 10 days before the meeting, but they can still let it out, leak it out if they were going to change their mind. So, and that hasn't come out. So even after this whole concerns with the regional banks, so we do look for that 25 basis point hike, and then of course we have the Fed Chairman Powell. He'll have his press conference shortly thereafter the announcement, and that's where we really want to see what's going to happen. A lot of people are expecting a hawkish pause. In other words, that he'll signal that this is going to be our last hike for a while. But if inflation continues, especially in the on the wage inflation, that they could possibly raise rates again. So I think that's kind of the consensus right now, is for a hawkish pause.
What are the notable market movements ahead of the announcement?
Well, it's very interesting because, the bond market, even though interest rates jumped on Monday, they've come down the last couple of days. It's a little bit of a flight to safety trade because of this concerns over the regional banking system. But also, I think, because people are worried that if these regional banks are having problems, that's going to be less loaning. They're going to have a contraction of credit, and that's going to slow down the economy. So that's, again, even though short-term rates may be raised today by the Fed, longer-term rates are coming down because of concerns over the economic growth.
If they do raise rates, what backlash to a rise in rates might we see?
Well, especially if they stick with that hawkish pause. In other words, still, if they say that, hey, we're not going to be cutting rates anytime soon, because the stock market is kind of pricing in, and even the bond market, pricing in a rate cut later this year. But if they really push that off, I think that's going to weigh on the stock market, because the stock market is still expensive at almost 19 times earnings. And if rates are going to stay high, that's going to be tough for them to maintain that kind of valuation level.
Matt, you mentioned inflation just a few moments ago. I mean, how would you assess the resilience of the U.S. economy in the light of those inflationary pressures, which just don't seem to go away?
Yeah, it seems to be a lot having to do with, we talked about employment, but also, the consumer. The consumer spending has remained high. We are starting to see some cracks in that, though, with, we see the credit card debt hitting all-time highs, and we're starting to see like some of the retail stocks, the stocks of retail companies starting to come down a little bit. And even when we had good reports out of places like Visa and American Express, their stocks have actually come down a little bit. So if the consumer doesn't keep spending, if that starts to slow, that's going to give us some headwinds for the economy and the stock market as well.
Matt, good to see you. Come back on the program soon. Matt Maley, the Chief Market Strategist at the asset management company Miller Tabak Co.